So as an introduction to Heliostar, we're a new company that was formed in August last year, Matt. So we came about by a private company that I'd founded that we merged with Red Star Gold to effectively create the whole new company, Heliostar. And we did that because we want to advance our flagship project, the Unga asset in Alaska. It's got 384,000 ounces at 13.8 grams per tonne, really high grade. But we're there because we think it can be materially bigger. Our first goal is to lift it to 1 million ounces. So we've got 3 rigs on the property at the moment, and we're aggressively drilling to unlock the potential of Unga.
Brilliant. Thanks for the summary. And hello, Charles. I hope you're well. Where are you?
In Vancouver, in the office.
Oh, good lad. Okay, so it's a civilized time of the day there. Well, I just want to get into a little bit of background because a new story. I mean, we did speak a couple of days ago only because we had a slight technical failure, but we haven't spoken or met before, and we hadn't heard the story. So I'm kind of keen to get into it, especially with some of the grades that you've been putting out. Can I go back a bit though? This kicked off last August. There was a merger. Private company and assets. So can you give us a bit of background to that?
Yeah, I'll even go back a step further that maybe even introduces myself a little bit. So I'm a geologist, as you can tell, not from Canada originally. Worked for mid-tier and majors mostly, probably most notably Newcrest. So got to see a lot of advanced projects around the world, was fortunate enough to be involved in a number of copper discoveries. And then we moved over to Vancouver just because North America is a place to be. There's more projects, there's more financing. It's easier to be successful in this business being based in North America. So moved over to Canada about 5 years ago. Started working for a prospect generator, and that company went for a good ride. Evrim, now Origin Royalties, but I got a bit jaded with that business model. You can work very hard, and you need that serendipitous moment to occur, and it could happen in 2 years, it could happen in 10 years. So we set out to build a new company, a company that I think our DNA is exploration success, recognizing where, cheaper deals that have significant upside. And so we put together some private funding in 2019, and we picked up some early stage projects in Mexico. Your listeners will probably be more familiar with Vizsla Silver. So I was the VP for Vizsla Silver last year. I'm now a director at Vizsla Silver, and that's been incredibly successful. We've got onto a very significant silver resource that's continuing to expand. I think it went from about a 30 to 300 million market cap in the last 12 months. That in the background was working up this private company and looking for a flagship asset, an advanced exploration project that we could ultimately build out the resource and put into production. And so we looked at a number of opportunities. I often tell people that we were looking for this in 2019 for some veneer of authenticity. We weren't just chasing the increase in gold price. And we looked at some other projects, they either didn't work technically or they didn't work commercially or the deal didn't make sense. And so we got talking to Jacques Vaillancourt, our chairman at formerly Red Star. And the Unga asset's this great project, as we'll talk about a little more. And it just hadn't seen the amount of exploration that you need to really kick it forward. Anyway, long story short, we agreed to a merger in August last year, which formed Heliostar effectively as a new company. So we got going with our drill program really quickly. We've been building a management team, and the rubber's really hitting the road now. Okay,
thanks for that. So how much money do you plow into the private entity, or are you just working for free? I mean, how did that work?
We put about $1 to $1.5 million in the private company beforehand.
Your money?
As much as I could afford, but also some high net worth investors who supported us.
Right. And so how much do you actually hold now yourself?
So I hold about 3.5% of the company now. So we've got if you look at all our management team, it's between, just with the last raise, it's come under 20%. But we've got a significant ownership that's very easy to show our alignment from that perspective.
Okay. How old are you actually?
37.
37. Oh, you lucky sod. Right. Yeah. And the only reason I ask is obviously, you've different people have been around a long time. You kind of expect them to have made some money, been successful, and put a lot into it. And when you're starting out, I think it's a bit harsh or hard to expect the same thing. So I just want to make that distinction. So So, right, thanks for that explanation. Can you talk about your management team? You said you put together a strong management team. Obviously, Jacques, his reputation precedes him, but who else is on the team?
Yeah, I think, well, starting with our board, I actually think we have a really strong board for a company our size, in that we actually do have a fairly audacious long-term goal that we want to become a producer. I know most junior companies don't say that, and there's a number of pathways that you may or may not go down to get there, but I think there's definitely a sweet spot in this industry. I worked for enough sort of bigger and smaller teams to know that there's a sweet spot in that sort of 2 to 5 billion market cap, 2 to 3 operating mines, that you're small enough that exploration, discovery, M&A makes sense. And you're not so big that nothing matters. I've also worked for those companies, and it's just so hard to move the needle. So we have to start that with more modest goals. And so, we've got a nice range. We've got Jacques Vinecourt and George Island, who've got a lot of investment banking and institutional experience. Then on the technical side, myself, Alan Wilson, and Ken Booth. Alan's not a name that many people will know. He's only ever worked for major mining companies, BHP, Rio, Newcrest, most recently the head of exploration for Antofagasta. So not a commercial name, but, great track record, would have done 50 deals in the last 10 years all around the world. So very good commercial acumen. And then William Lamb agreed to join, firstly, my private company and then the board. And William's fantastic. He took Lucara diamonds and took the Kawari diamond mined with Lucara from PFS to steady state operation. So as we want to go through resource development, permitting into production, actually our board's done every step along the way, and I'm kind of proud of that. It's not a common thing for a company our size.
Yeah, so how do you know William? I know William from about 2011. How did you meet him?
Yeah, it's careful who you run into in Vancouver. Met through friends, through brokering friends actually, and so just sort of talked about business and how we think about the business, and I think we see things fairly similarly. And so I always joke that when things go wrong in companies, because inevitably things go wrong along the journey, the finance guys point to the cell on the spreadsheet and say, fix that. It's good to have those operators like William who can get in the trenches and say, well, this is how it came about. This is the solution to get out of it. So you need that operating experience is invaluable, I think.
Yeah, no, absolutely. Certainly at this stage to make sure that you're choosing the right path, because there's nothing more expensive than making the wrong decision early. Can we talk about your share structure and the corporate structure? Because obviously, you're sitting at over $1. You're about 30, just under 40 million market cap. It's fairly tight at the moment, and I appreciate that you last month did a small raise, $5.6 million too. So, but tell us who's involved. What type of money it is.
Yeah, so as you said, so we went up to 37 million shares on the raise last year. Again, if you want to go from this journey from the start to the end, you need all the shots in the gun. So you need that tight share structure at the start, or you're just not going to be successful. So we started out, as I mentioned, lucky to have a number of there was about 15 high net worth investors back to the private company. And so then when we completed the merger, Eric Sprott was a major shareholder of Red Star and continues to be a shareholder. So it's nice to have a bit of name recognition on that side. But also we needed to bring some more institutional names to support the company. And so the Phoenix Gold Fund, K2, Crescat, Broma have all come in the last couple of rounds. So started to balance that retail institutional as much as you can for what's still a fairly early stage story. Okay,
fine. Well, we better start talking about Unga, because some of the numbers coming out there are, well, they're very impressive, aren't they?
There's not too many close to half an ounce resources. It's small at the moment, but we're not there for the 384,000 ounces. We think we could have a very big district, and that's why we're there.
Well, exactly. Well, let's address that head on, okay? Because most people look at this, whatever it is, 340,000 ounces, it's nothing. Why would you bother? So that's clearly not the plan here. It's not the game. So what are you setting out to try and do, and how are you going to go about it? You've raised a small amount of money recently, so what are we looking forward to?
Yeah, so I'll start with a bit of a history lesson and get us to here, and then run through what we think are the next steps. The It's actually quite an incredible project. It was Alaska's first underground gold mine. It produced about 130,000 ounces at approximately 10 grams per tonne. In fact, we've got some great old diaries and reports about this time. There's a great detective story for one of the targets. And so they produced quite effectively there until they hit the base metal zone. And they couldn't profitably recover the gold from the base metal zone. And so the mining stopped principally in the early 20s and then in fits and starts into the 30s. And the project sort of got lost over the next 50 years. People came and looked at it. There's old Anaconda reports. Quintana Duval, good porphyry explorers, went and had a look at it in the 70s. And then it saw a good rush of work in the 80s. But it's one of these stories where 3 different companies owned the 3 pieces that probably all needed to be together. And they found a new resource they're called the SH1 zone, started to get found in the 80s. But none of them, with the gold price of the 80s, with not having enough, it never really got critical mass. Then it got lost in an oil and gas company for nearly 20 years until the late 2000s. So the Tennessee Oil and Gas Company, they were happy to have some losses to offset in the corporate entity. So there's 20 years effectively. And it got picked up by Full Metal Minerals and then JV'd to Red Star. But Red Star were initially focused in Red Lake in Ontario, hence the name. So they didn't really turn their attention to it till the last few years. And they had a few good years, but, they had tough markets. But 16, 17, they had a good run. They put together the resource that was published early last year, or did the bulk of the drilling for that 43-101 compliant resource. But that was just SH1. So most of the project hasn't seen any significant exploration for 40 years, which is kind of hard to believe, really.
So what was happening in 15, 16? Were they actually producing at that point?
No, sorry, they had a good run. They got funding. They did some good drill programs. So the challenge when you work in this part of Alaska, so we didn't touch on it, we're down in the Aleutian Islands in Alaska. And so most people think cold, frozen, short field seasons when you think Alaska. It's quite a unique project in that, we can explore for 9 months of the year at the moment. Ultimately, we'll be able to do it year round. So we're on site in April. We finished at US Thanksgiving last year. It's a very temperate project. The challenge that I think's defeated people in the past is you need to bring economies of scale. If you go with one rig for a couple of months, it becomes expensive. So whereas if you get organised and do what we did last year and again this year, we've got 3 rigs at site. And just becomes easier to get traction and get critical mass. I think that's what we're going to bring that might be an advantage over previous groups.
Okay, so I'm just trying to understand. Given the high grade, you're talking about 13.8 grams per tonne. I mean, it's well up there with the best, right? 2 points. One, someone has actually sent a question in. There was some mention of the resource estimate being questioned at the time you did the merger. Was that true? And if so, what was that about? Yeah, so when we came in as the new management team, there was a question raised of the independence of the author. There was no issue with the work that was done on the resource. Red Star actually just made a mistake. They're a small company trying to look like they had a bigger team, and they put their consultant who did the report as their country manager on the website. And so the stock exchange took the position that, as the clouds go past, I go in and out. So, you're bringing clarity to this issue, so that's the main thing. Yeah, exactly. What the light comers say those moments. No, the exchange took the position that the average person on the street would not consider that person to be independent. So we had to go and find a different author, and that was completed and rectified with exactly the same technical data behind it a couple of months later. Okay, small issue, easily dealt with, fine, but not the first time a small company's tried to look a little bit bigger than they actually are. When us coming in and doing that merge, I think raised the profile a bit, which raised the review status of all the different parts of the company. And that's, the next thing that we did. There's a couple of people it's worth mentioning. We built a whole new management team when we came in. Most notably Sam Anderson joined us from 17 years with Newmont. So part of the new Heliostar, literally a new CEO, new VPX, new CFO,
new office manager, new exploration manager. So we've built a whole team in the last few months. So that's why we really are a new entity.
And how are you paying for all of this? I mean, have you obviously you raised a little bit of money recently, a bit of money last year. I mean, what is it? How's the G&A looking? Are you keeping it tight?
Yeah, so G&A is really tight. We're about 1.2 million a year. That includes any marketing that we spend. So that's we're explorers. We put money into the ground, and that's been the focus, and we'll continue to be.
No, that's fine. That's absolutely reasonable. And then back to the grade component again. It's had so many owners, some of them a little bit less focused than others, as you've explained there. But at those sorts of grades, has it never been in a position to either one get finance? And I understand the market for the last 10 years has been tricky at various points, but at those grades you can make money. So why aren't people trying to make, or haven't people made money from this project before?
It's a good question. I don't think I can easily answer that. I think it's size. I think you have to probably get, we internally think we can comfortably get to 1 million ounces. So that's that goal. And we all know that's, that 100,000 ounces a year for 10 years with those kind of margins would be very profitable and fairly straightforward to finance. I think maybe at 380, not quite at that point. If you picked over 500,000, maybe that might be something people thought about. But it's a good chance to say, this is a big district. That's what attracted us as a management team to the asset. There's 10 by 14 Ks of porphyry targets, bulk tonnage gold targets, and these high grade veins. I think everyone knew that this could and should be bigger. I think we can show that as a first step.
Well, okay, so let's kind of move on to the model. There are models like people like Rox Gold who've been taken out recently. He did start on 400,000 ounce. But let's not talk about what people in the past may have chosen as their business model. Let's focus on how you easily get to 1 million ounces, because I'd be really fascinated to understand how you do that, the style of exploration and what you're trying to do in the market. Because we've seen a lot of new plays. We've seen some Newfoundland guys, crazy high grades, drilling for headlines, and they're playing it that way, and it's worked. I'm not knocking it. It's worked
in the short term.
Okay, you said it. I didn't. And then you've seen other people, and also before that, the Great Bears of this world. It's a nice, not just drill, keep going until the data doesn't come back anymore. How are you going to approach it? Because you're going to have to, 40-ish million market cap. You're going to have to raise money every now and again to kind of move this thing forward. And you've got to pick the way that you're going to play the market and the way that you're going to get the data. So how have you guys decided to approach this?
Yeah, I think there's a few lessons from the discoveries that I've been involved with in the past that play this out. In epithermals, you do have to do a lot of drilling. That's just the nature of them. But the reward is that they're generally low capex to put into production, and they're often high margin. And so the plan, I think, for Unga for us is fairly straightforward in the sense that I think previous explorers might have got lost with all this prospectivity. And how do you grapple with it as a small company? So the first thing we've been able to bring some greater amounts of capital to it. We raised $7 million in August last year, just over another 5.6 this year. So we've been able to bring more funding to the asset. And then the next thing is we've identified 4 key targets that we think will get us to that initial 1 million ounces. We think ultimately we'd like to grow beyond that. But we have 4. And I kind of tongue-in-cheek tell people that one's an open high-grade resource, one's a discovery from last year, one's an old mine, and the 4th's a non-compliant resource. So as exploration targets go, they're pretty high probability drill targets. For example, the deepest hole in the resource is 5.5 meters at 24 grams, never been followed up on. So you don't have to be the world's greatest geologist to say that's a good place to step out and expand. So we think we took 3 rigs to site. 2 of them are RC rigs. Which is not fairly common in Nevada and Australia, but it's not particularly common in Alaska. And so we're doing that because we want to rapidly test and get a lot of holes into our targets. And so that's working. We're up to about 30 holes in the program this year. we should actually have our first results in the next couple of weeks. So, we'll be getting our results when most people are still just mobilizing in Alaska. And so the diamond rig is systematically stepping out in the resource area. And we think we can grow that resource in the 0.5 to 1 million ounce range. And then we've got these other targets. So Apollo's the old mine. And as I mentioned, there's a style of vein, at the risk of, I'm a geologist, so I could get into this for way too long, but it's gold rich at surface and then gold, silver based metals as it gets deeper. And as I mentioned, the old timers couldn't recover that. But the way you explored back in the day was with the pick and shovel. So they literally sunk these shafts, drove these tunnels across and told you, here's the vein. It's 5 meters wide, it's 6 meters wide. And in a couple of places, they said, well, on average, this is the grade. And those grades come back around, 8 to 10 grams gold equivalent. So the old timers told you where it was. But there's this great mystery in that there's these old hand-drawn maps from the 30s that the old mine manager called Frank Brown did. And a group tried to test them in the 80s. And they drilled exactly where Frank had drawn these workings, but didn't get anything of, they clearly didn't get the workings and any good results. So everyone scratched their head and we scratched our head. And so we decided to solve the problem with brute force this year. We just drilled fences of RC holes, roughly where we thought it could be. There's the old shafts, you can't be too far away. And we very clearly found those veins. So now we can say, and what happened was, I think the reports were written about 15 years after the mine closed. And they're also written to raise money to try and restart the mine. So promotion throughout history. So maybe there was a slightly more optimistic view of a few features. But nonetheless, there's just an error in either Frank's recollection or some local grid or something. And so with the RC rig, it was really easy to just say, let's drill, a hole every day and just drill a fence until we find it and then step out. It's cool detective work.
I thought it was bad these days, but crikey, going off a hand-drawn schematic to go and raise some capital, that was pretty brave investing. We've actually got it easy. I shouldn't complain.
It's, at least, well, it's mostly easier to do due diligence these days. There's a lot more data accessible to a lot of people.
It's true. Okay, so let's come to the usual conundrum for companies kind of just starting up. You got to get to 1 million ounce resource. That's the first hurdle. You then got to pick what your next targets are. Do you just keep drilling? I hope you keep drilling. So how quickly do we get to 1 million ounces? What are you targeting, and with what budget? That's
a how long's a piece of string question. We think we want to show this year that we're well on that pathway, and I think realistically it will go into next year to ultimately. If we know we're on the pathway with this year's program, then I think we could definitely make a projection to say at the end of the summer next year we can deliver that. But we've just got, it's the reason we raised some extra capital. We had the funding to do the first phase program, but rigs are getting really tight to get in Northern Canada and Alaska. So we recognised if we did the phase 1 program, waited for results, raised money, we mightn't get the rigs for the rest of the season. So we bit the bullet in April and raised that capital so that we can do the full program that we want to this summer.
I was talking to someone else the other day about some drill rigs which they'd commissioned. I think they had 3 as well, but they were talking about doing 3 shifts a day. How much? I know, right? 3 lots of 8, bang, off you go, boys. That's getting full utility from your resources. So, how does it work up in Alaska? I know you're southern Alaska, but you know what I mean?
Yeah, so, despite the fact that we're a reasonably remote project, our accessibility is fantastic. There's our project's on 2 islands in the Aleutians. The main island, Unga, is about 20 by 35 k's. It looks small on a global map, but when you're there, it's quite a big place. And so next to that is a town called Sandpoint that has a major airstrip. You can land a 737 on the airstrip. So there's daily commercial or charter flights in and out. It's a hardcore fishing town. There's a Trident fishing cannery there. And so our ability to service the project is really easy. So we just operate the same way most other projects would in southern Canada or the lower 48, for example.
Okay, so it's one team, 8-hour shift. There's your drilling done.
So the RC is going with 1 shift, 12-hour shift, and the diamond is 2 shifts, 2 12-hour shifts, which is the industry normal.
Got it. Okay, understood. Brilliant. So, right, so you go into next year, you will, I guess, burn through this money. Is that right?
Yeah, we think so. What we did was we got up to site last year and we got going, and our view was that everyone had been focused on the resource area. We think the resource area will grow, but we've got these other targets, the Apollo mine I talked about, and we made a discovery at another area called Aquila last year. And so this year, the plan is just to methodically step out on those open intersections. That's why I refer to it as pretty high probability exploration. This is not wildcat shots.
Okay, so you are focused on Unga. That's where all the money's going. You're not being distracted by anything else.
We had, at the close of the raise, we had about $8.5 million. We're spending 6 of that on Unga this summer. And we think that'll give us that re-rating, that then we would come back and raise additional capital to then do the resource drill out formally.
It's kind of referencing Mexico. You're not going to get distracted there, are you? Or are you going to find some way of monetizing that?
So yeah, we've got 3 projects in Mexico and Sonora. They're earlier stage projects. We put $600,000 into those at the beginning of this year. Actually just got back. We're waiting on the final drill results from La Lola. We put out some great surface results on Oso Negro, some really continuous high-grade silver. I think 360 meters of strike, going 420 grams silver equivalent. So really good target. And if that was our only asset, I think we'd be drilling that tomorrow. But Unga's just more advanced and it's clearly our flagship. So we'll leave the Mexican stuff for a couple of months and then come back. If we have success, we think each one could be a company-making project. I'm sure everyone tells you that, but I think each project has the size and the scale to be that. But they're just earlier stage, what we have in Mexico. So we'll work them up through the methodical process, prospecting, systematic sampling, drilling. And if we get to the point where we have big success in one area and not the other, then yes, obviously we'd look at our corporate options to maybe split them out or do something different. But we're not quite at that point yet. Mostly gold, but also we've got one high-grade silver project as well. So epithermal veins, again, we've got one great project that's just literally the Pac-Man bite out of Silvercrest Minerals' new land package. So unfortunately, they had deeper pockets and outbid us for the rest of the district, but we both liked what we saw. Okay. So you've allocated some capital to that, but not going to distract you from what you need to do. Your number one priority is get to 1 million ounce. That's what you're saying? That's our first goal, yes, at Unga.
Right. When you do that, what's your second goal? What's the next target you'd set yourself? I'm trying to work out how this works out.
No, actually, seriously, from a strategy perspective, what we'd look to do is if we get to 1 million ounces, then we've got a clear permitting path to build the mine back into production. Then in concert with that, while we're going through that permitting and studies process, we'll then be able to continue to expand out and hopefully find the next 2-3 million ounces that probably is a forward-looking statement, that may exist in the district, but it clearly has the potential for. So I think the first step allows the permitting pathway so that you've got your quickest path to production, and then ultimately grow the resource because of the economic benefits of that brand.
We're now getting to something that makes sense to me. So you believe you've got a district and you've got to do the work to show market that you've got district potential there with 4 targets, which I say all advanced for different reasons, but you're very sure that you want to get into production as early as possible. This isn't about just showing scale and then sit back and go, who wants it? This is you want to show that it can get into production with these sorts of grades that you're seeing and start delivering cash whilst doing all of your other expansion, exploration, etc.
Exactly. With those grades, 1 million ounces is going to be a very profitable mine. And so it makes sense to get that into production as quick as possible. Right.
But the nature of it, sort of, so there's a tough one. I'm trying to understand the sort of CapEx type requirements, what you're going to have to get to market and put together with not just the financing, but the team and the type of mill, et cetera, all of that. So what's typical for around there?
Yeah, so it's jumping down the path a bit, but I've been through this a couple of times. Our VP Sam's been through it with Newmont a couple of times. You just scale up. You start to bring in the resource support to put together the resource. Then you bring in the engineering support to do the studies and the engineering and the trade-off options. but whether it would be, it's most likely going to be an underground mining scenario on what we see so far. And so then you would start to build out in an initial PEA what that looks like. Rule of thumb for these kind of mines around the world, you're probably in the 200 to 250 million capital cost to build it. We've already had we've started to build our relationships with the DNR, Fishing and Game, the Army Corps of Engineers in Alaska, just to understand what you need, so that we're doing something now that doesn't become something we should have started 12 or 18 months earlier from a timeline perspective. So we're just sort of working that through. Our first goal is to lift the resource. Then we'll start to look at the studies and trade-off options that will ultimately then lead to the construction decision. Beautiful.
Okay. Look, I appreciate you telling us the story. It looked exciting from the outside. Now I've heard it. I think there's some great potential here. I just want to sort of see you take all these little baby steps towards your 1 million ounce, and wish you well for doing that. Stay in touch with us. Let us know how you're getting on, and especially with some of these drills, I suspect we'll see coming from you. I'll be really intrigued to have that conversation.
Yeah, thank you very much. It should be a fun summer for results that will lead to all the bigger picture conversations we've just had.